Are you tired of feeling like you're losing money? Let me be direct. If you run your own business and you're making good money, you are probably making one huge mistake that costs you thousands. You work hard to earn your income and you rightly pay tax on it. But then, after you've paid your dues, you take your leftover cash, you invest it, and when it grows, the government comes knocking again for another slice of the pie. You pay tax on the money your investments make. This is called paying tax twice. It is not a winning strategy. It's a slow leak that drains your wealth over time, and it needs to stop. The good news is there's a simple, powerful way. I call it the TFSA Boss Move. It helps you keep more of your hard-earned money legally and ethically. Meet Sara. She runs a successful online shop, pouring her heart into every order. This past year, her sales took off. For the first time, she had significant cash left after expenses and bills. Feeling responsible, she put it into a standard investment account. Her investments grew an extra $5,000 until tax time rolled around. That's when she realized her mistake. She paid income tax on business profits and tax again on the $5,000 gain. It felt like a penalty for being successful. She wished she had used a TFSA. One decision could have saved her over $1,000. This story isn't unique. I see it all the time. They master their craft, build great businesses, and neglect simple wealth systems. They focus on earning more, but forget about keeping more. The TFSA Boss Move changes that. Be as strategic with savings as you are with business. Make your money work for you without sharing profits twice. It's about building real, lasting wealth. Let's put this to work for you. Let's get one thing straight. A TFSA is poorly named. Calling it a savings account is like calling a Ferrari a decent car. It massively undersells it. It's a powerful investment account, a government-sanctioned shelter where growth is 100% tax-free. Think about that. Every dollar of interest, every dividend, every bit of capital gain is yours to keep. The government can't touch it, ever. Key facts: you contribute after-tax money and withdrawals are tax-free. Contributions and growth. It's flexible for short-term goals and long-term retirement. There's an annual limit, e.g., around $7,000 and changing. Unused room carries forward indefinitely. If you've never contributed, you could have over $95,000 of room as of 2025, ready to use. Stop thinking of the TFSA as a simple savings account. Start seeing it as a financial fortress, a zone to deploy capital strategically. Stocks, bonds, ETFs, and more. Compounding without the drag of taxes. Every dollar earned stays in your pocket to reinvest or withdraw tax-free to fund your next big goal. For the self-employed with unpredictable income, the combo of tax-free growth and flexible tax-free withdrawals is a secret weapon. That's the TFSA Boss Move. Be intentional, be consistent, and let tax-free compounding do the heavy lifting. Now, the RRSP, the old guard. It's been around for decades, built for retirement. Mechanically different from a TFSA. It's all about tax deferral. You get a tax break now in exchange for paying tax later. Contribute, deduct from income. Earn $100,000, contribute 18, pay tax on 82. The refund feels great, but it isn't a tax-free lunch. Gains aren't taxed annually, but the bill comes due at withdrawal. Withdrawals are taxed as income, contributions, and growth. You're deferring tax, betting on a lower future tax rate. Safe for many employees, less so for successful owners. RRSPs are rigid. Early withdrawals trigger withholding and permanently lose room. Here's the core concept. TFSA, pay tax now, free forever. RRSP, tax break now, tax later. Your choice depends on income now, income later, and your need for flexibility. Put 10,000 into a TFSA. It grows to 15. Withdraw 15. The 5,000 gain is all yours. No tax. Simple. Clean. For life. In a 40% bracket, you'd contribute 16,667 to net 10 after refund. If it becomes 25,000 and you withdraw at 30%, you keep 17,500. Good, less certain. TFSA offers certainty. RRSP is a bet on future tax rates. Many entrepreneurs still earn later. If your rate stays high, RRSP benefits shrink. TFSA is a guaranteed win on tax, regardless of future income. Pick the timing that protects your gains and your flexibility. So, who is the TFSA for? Great for almost everyone, especially entrepreneurs and the self-employed. After you fund a cash buffer, extra profit shouldn't sit in low-interest accounts. Put it to work tax-free. If you expect a high bracket later too, TFSA shines. Many owners keep consulting, sit on boards, or launch new ventures. Opportunities and emergencies aren't scheduled. With a TFSA, withdraw anytime, no tax, and the room returns next year. Use it for 1-year goals or 30-year goals. The tax-free growth accelerates everything. For risk-taking founders, predictable, accessible, tax-free growth is real peace of mind. Your war chest, make it a cornerstone. I'm a big TFSA advocate, but RRSPs have their job. If you're certain you'll be in a much lower bracket in retirement, the RRSP makes sense. Need capital now? An RRSP contribution can generate a large refund to reinvest in the business. If your TFSA is full, the RRSP is the next best shelter. After filling the fortress, use RRSP to keep growth sheltered from annual taxes. Be brutally honest about future income. Many owners still earn a lot later. Sales, consulting, dividends. If your rate stays high, deferral can become a tax trap. Use the right tool for the job. All right, enough theory. Here's the system. Ask 3 questions in order. The answers tell you where money goes. Step 1. Does the business need this money? Be ruthlessly honest. If an investment can measurably boost returns, fund the business. That's your primary engine. If no, step 2. Is this specifically for retirement? Default to TFSA for flexibility. Choose RRSP first, only if you're truly confident of a lower future bracket. If it's not for retirement, step 3. Use the TFSA. Invest for growth. Keep it safer for near-term needs, or hold as an opportunity fund, still tax-free. Fuel the business first, plan retirement second, shelter everything else tax-free. This eliminates guesswork and puts you in control. Meet John, an app founder with 30,000 in surplus. Step 1. Allocate 20,000 to safe liquid business savings. Step 2. The rest isn't retirement money. Step 3. Move 10,000 into TFSA. Invest in a balanced ETF. Tax-free growth, flexible use. Ava's a high-income consultant with 50,000 to invest and expects high income into her 70s. Business doesn't need it. The money is for retirement. She prioritizes TFSA, contributing 30,000 to catch up. Invested for long-term, tax-free growth. With TFSA maxed, she places 20,000 into RRSP, better than taxable accounts, with flexibility for later planning. The key, she used the most powerful tool first. Knowing is one thing, doing is everything. First, find your TFSA contribution room. Don't guess. Over-contributing triggers a 1% per month penalty. Log in and get the exact number. Open a TFSA. Big banks are fine, but a low-cost self-directed brokerage is the boss move. Use platforms with low fees and broad access to ETFs and other products. Fund the account. Don't let cash idle. Align to goals. Near term, safer vehicles. 5+ years, Low-cost global index mix. Keep business reserves separate. Don't raid long-term TFSA for short-term cash flow. Your TFSA builds personal wealth and freedom. It's your fortress. Protect it. We've covered a lot. Why paying tax twice is a leak, and why TFSA is a powerhouse. The 3-step boss move: fuel business, plan retirement strategically, shelter the rest tax-free. A 10,000 gain in a TFSA is 10,000 to you. Taxable could drop below 7,500. Over decades, that gap is life-changing. The TFSA Boss Move gives you that edge. Be the boss of your money. One Action Today. Log in to CRA My Account and check your exact TFSA room. Seeing the number makes it real and easier to act. Are you making the most of your TFSA? Tell me your biggest tax-free question below and hit subscribe for more simple, resilient money systems. Start the habit today. Small, decisive moves create unstoppable momentum. Closing. Keep your gains. Build your future.